Hey everyone, this is Vignesh from Investing Gurukul. Hope you're doing well. So, have you ever heard people saying mutual funds sahi hai, but no one tells you why they are actually good? So, in this video, I'll break down mutual funds in the simplest way possible using analogies in Biryani, cricket, IPL, RCB. So, if you are new to investing or confused about where to start investing, then this video is for you. So let's say you walk into a restaurant and you order biryani. Full risk, one dish. What if it's undercooked? Or what if it's too spicy? Now imagine instead you're ordering a thali, a bit of rice, dal, roti, sabji, sweet. Even if one item is not great, others make up for it. Same way if you order a South Indian meals, you have rice, you have sambar, rasam, papad, and a lot of other things added to it. So that's how mutual funds work. So instead of betting on just one stock, which is biryani, you invest in a bunch of stocks, the Thali approach. So what does so this spreads risk and it gives you a lot of balance. Now let's take the example of RCB team. So let's talk cricket. RCB had some of the legends like Gale, ABT Villiers, Kohli, top players, but they never focused on having solid all-rounders, bowlers. They didn't have a team strategy. So result, zero trophies in 17 years. So that's like directly buying one or two hot stocks that are having a lot of traction in the market without thinking about balance. So you may end up without any huge returns if you follow that. So mutual funds, on the other hand, are like a well-rounded cricket team, a smart fund manager. Ensure you have batsmen, bowlers, fielders, all working together for victory. That is exactly what mutual funds do to your returns. Mutual funds do to your risk management and ensure that you have participation in equities, you have participation in the stock market, but still the risk is less and you can keep making a lot of money. Now let's discuss more about what a mutual fund is. So imagine Tenali Raman is asked to invest, the legendary king calls Tenali Raman and he asks him to invest 10,000 rupees. So he goes around collecting money from 100 villages, combines it into a big pool of 10 lakhs, and then hires an expert to invest wisely on everyone's behalf. That's a mutual fund. So mutual funds collect money from many people like you and me, and a professional fund manager invests it in stocks, bonds, or a mix. So you get units based on how much you invest. And your money grows over time without you even needing to actively manage everything. So that is the beauty of investing in mutual funds. So it remains passive, generates a lot of income where you do not have to do a lot of active work. So now, do you want to grow wealth passively? Yes, all of us would like to see our growth of wealth. So we all want to make money while we sleep. So mutual funds help you exactly with that. So with small monthly SIPs, even with as low as 500 rupees, you can build serious wealth over the long term. So it's like planting a sapling. Slowly over time, it grows into a very big tree that gives shade, fruits, and a lot of other benefits. And what is the best part? The power of compounding. You earn returns on your returns. So that's like earning interest on interest, which multiplies your wealth quietly in the background. So these are some of the biggest aspects of mutual fund. So now let's see what are all the major benefits of mutual funds. So why do so many people invest in mutual funds? So first thing is diversification. So your money is spread across multiple companies and it is managed by a money manager who is doing it full time. And then you have other people like analysts. Then you have trustees, you have sponsors, you have bankers, you have SAB, all of them guiding them, ensuring them they are compliant and they are making sure that your money is safe. So The other thing is compounding. So it gives you long-term returns, which multiply your wealth. And the third important aspect is you don't have to invest a lot of money like you do in real estate. So not even lakhs of money needed. Just even you can start with 500 rupees. You can start it small. You can do regular investments, which can keep you disciplined. So SAP is systematic investment planning. You can, just like how your EMIs go, SAP will go month on month. Every month, it can automatically get deducted from your account, and it can automatically get invested in different mutual funds, which again invested in stocks. So overall, this particular investment opportunity is very, very unique, easy to do. And if you do some of the basics things, you can actually multiply your wealth by this mantra called mutual funds and through compound investing. So let's see the common myths about mutual funds. So mutual funds are risky. This is something that has been told to us on a regular basis. Only if you pick aggressive funds without understanding your goals, it is risky. So there are a lot of low risk options like debt funds, hybrid funds, which you can invest where the risk is going to be very low. The second myth is you need lakhs of money to start investing in mutual fund. No, you can start with even 500 rupees a month. People also think that I will lose all my money. No, unless you panic and withdraw at the wrong time, like now. So now the market is falling like 9 pence. So yesterday we breached 23,000. So Monday we are likely to go below 22,500. So the market is going to keep falling and then it will go up. So in 2013, it was at Sensex itself was at 13,000. So that's how now it is around 75,000. So the market will keep going up and going down. Don't panic and withdraw your money at the wrong time like now. So now is the best time to add more investments. Now is the best time to start investing in mutual funds. So always match your fund to your time horizon and risk tolerance. That is the key. So overall, if you ask me, you have to start small, but you have to think big. So you don't need a lot of money to start. You need the right mindset. Just like a plant grows from a 500 rupee coin in the soil of patience, mutual funds reward long-term investors. It rewards you with tons of wealth creation in the long run if you stay disciplined, if you stay completely aligned with the investment strategy that you start with. So always start small, think big, and stay consistent. So consistency is the key to building wealth. So if you like this video, put a like, comment, or subscribe for more simple investing videos on mutual funds and stocks. And note, don't miss the next video. We'll show you how to review a mutual fund like a pro and start investing. So see you in the next video. Bye.